Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar. Bert Salazar.
Hey, good day, everyone. Hope all of you are doing well and you're protecting yourself and keeping your safe distances and you're staying home for the most part. At the end of the day, we're going to get through this together and we're going to come out much better on the other side, but it's just a matter of having to wait it out at this point in time. This is episode 105 of Your Tax-Free Life. And today I want to spend a little bit of time about talking to you about how to manage the challenges of life. And as you all know, for the past 30 days, we have been going through major challenges that none of us predicted, and most important, none of us could have avoided in any way, shape, or form. Now, I have been predicting for the last 2 years, I would say about 18 months, that there was going to be a stock market correction. But obviously, I did not know that the correction was going to come from a virus. I had already seen the real estate market, slowing down. I had seen some issues in the economy that had me concerned, and I wanted to communicate that not only to all of you that are on my online community, but also to the vast majority of my clients as well. But none of us expected that it was going to be so fast and so devastating as to what we're doing today. So I want to spend a few minutes talking to you about how to manage the challenges of life. And this past Saturday, I went ahead and conducted a financial webinar, and I called it a financial Q&A because I wanted to answer as many questions as I possibly could, not only for my clients, but also for the online community. Now, the vast majority of my clients have been protected because of the fact that we have been working together for many years, and we had set up protection products and services that were suitable for them. And most of them do not have to deal with the type of challenges that most Americans are dealing with today. But that's a conversation for another day. So I hosted this financial Q&A, and I received over 80 questions, but I only had an hour, so I didn't obviously cover all 80 questions, but I did provide an answer for the most critical questions that were being asked by all of the clients and the online followers that were so gracious to submit questions to me. So what I like to do is I want to talk a little bit once again about how to manage the challenges of life. And I want to walk you through a story because I had just turned 18 years of age and I decided to join the Marine Corps. And the reason for that is back in the 70s, they were looking for a few good men. So I thought I was one of them, so I wanted to join the Marine Corps. I wanted to give back to this great country of mine that had welcomed me when I was a kid and my family with open arms. So I felt that it was important before I went to college that I would give something back, so I joined the Marine Corps. Now, one of the books that I read several years ago, it was a business book that it was very interesting because the name of the book was Semper Fi, Business Management the Marine Corps Way. And for those of you that may not know this, Semper Fi is what we Marines use very eloquently every single day of our lives. Semper Fi means always faithful. Always faithful to our families, always faithful to the Marine Corps, always faithful to our country, and always faithful to our way of life. And it's a really, really good book. So if any of you has the ability to pick it up on Amazon, I would suggest you get it. Again, the name of the book is Semper Fi, Business Management the Marine Corps Way. So I had just turned 18 years of age, and I joined the Marine Corps, and I went to boot camp. And I showed up at this great resort called Parris Island in South Carolina. Now, Parris Island is the Marine Corps recruit depot for the East Coast. The U.S. Marines have 2 training centers. They have one in Parris Island, South Carolina, so anyone who lives east of the Mississippi River will go to PI, will go to Parris Island. And if you live west of the Mississippi River, then you went to MCRD, Marine Corps Recruit Depot in San Diego, California. And we used to call those Hollywood Marines. So, you know, that's something that we use in the Marine Corps all the time. When you get to boot camp, your entire life is going to change overnight. You know, what you were used to living for the first 18 years of your life is going to change drastically. You actually train until you're blue in the face. And I remember when we arrived at boot camp at 2 o'clock in the morning, there was a big sign over the receiving barracks. Well, we used to have barracks back then. Now they have beautiful buildings and so forth. And there was a sign above the door of the receiving barracks that said, and I quote, "The more you sweat in peace, the less you bleed in war." Now you may say, well, Bert, what does that have to do with the coronavirus, what we're going through today, and the losses in our retirement and financial accounts? Well, I'll get to that in a minute, but there is a correlation with what I'm about to discuss in this short podcast. The other thing that I learned in the Marine Corps very early on in boot camp is that you have to be able to adapt, adjust, and improvise. So you adapt, you adjust, you improvise, and you have to apply it not only to your personal life, but also to the financial world that you're living through today. You either adapt to change and embrace it, or you will become a victim of change, and you will therefore die. So those are the things that I want to talk a little bit about today, and I'm going to give you some of the things that you need to start paying attention to, because the definition of insanity is doing the same things over and over again while expecting a different result. So we went through boot camp, 12 weeks of beautiful, tender, loving care, and I am kidding about that, but I learned a lot. You know, the Marine Corps taught me and boot camp taught me that it's not something that I would ever want to do again for the rest of my life. But I am so proud that I was able to go through Marine Corps boot camp, because it changed my life. It changed the way I do things. A lot of the things that I do today go back to my military time in the Marine Corps. You know, I'm very structured from a business and personal perspective. And I owe that to the Marine Corps. So once we got out of boot camp, I went home for about 10 days. I'm from Boston, Massachusetts, so I went home for 10 days. And then I flew across the country I had been assigned to the 1st Marine Division out of Camp Pendleton, California. So when I arrived in Camp Pendleton, California, I had never been on the West Coast. I grew up on the East Coast. And it was a totally different world for me. So when I arrived to Camp Pendleton, for the first 30 days at Camp Pendleton, you have to go through what is known as ITS, used to be known as ITS, which was Infantry Training School. And part of Infantry Training School is something that there was a specialty training that we did that it was very, very interesting, because it was known as Control Chaos Training. And Control Chaos Training in Camp Pendleton kind of trained you for war. And what happens is, I don't know if you've listened to Control Chaos Training in your private life or your business life, because some companies actually do apply it, but for the most part it's only for the military. Basically, what Control Chaos Infantry Training teaches you is that all the training that you do in the world, especially if you're in the military, everything goes to hell the first time that a grenade goes off. So Control Chaos Training was used to train all Marines throughout the world how to react in a control chaos status. Now, control and chaos doesn't go together, but in the Marine Corps, we made it go together. Because what you want to do and what you want to train for is that at the worst possible time in your life, whether you happen to be in the middle of a firefight somewhere in the world, or you happen to be at home dealing with the issues and concerns that we're dealing with today, is that you're able to adapt, adjust, and improvise and keep your head on your shoulders as you're going through hell, as what many of us are going through today. So how do you work in a control chaos status? How are you able to, in the middle of a war, in the middle of a firefight, to maintain your head, to make rational decisions when everything else around you is irrational in nature? And these are some of the topics that I'm going to be discussing with you in this short podcast today. But hopefully you're starting to think outside of the box, because it is important to do so. The other reminder of control chaos was an interview from Mike Tyson, I would say 15, 20 years ago. And Mike Tyson says that all the training in the world goes to shit the first time you get hit in the mouth. So once you get hit in the mouth in round one of that boxing fight, your instincts are going to take over. And that's the type of work that we did and the type of training that we did in the Marine Corps. Now, how do we apply that to the world that we live in today? Well, you need to make certain that there are some things that you can see and some things that you're not able to see because you're too enclosed in dealing with what's going on today to really start thinking outside of the box. But I want each and every one of you to think outside of the box for the following reason. I would recommend right off the bat for all of you to review all of your retirement accounts for any type of financial leakage. That could be taxes, that could be inflation, definitely stock market volatility, which is something that we're going through today. And your number one goal is how to plug the holes and how to avoid financial leakage. If the market keeps going south and you haven't gone to cash, how long are you going to wait? And then if you do go to cash, well, when do you get back in? So those are things that you need to be aware of. And I went ahead and cover a lot of those answers in my financial Q&A webinar that I hosted on Saturday. But I don't have the time to go through that today. But you need to start making financial decisions. The second thing that you need to consider is go ahead and review all of your fixed and variable expenses and do a line item cost analysis and try to reduce your current expenses by 20%. Now, I know many of you are going to say, Bert, that's easier said than done, and I agree. It is easier said than done. But if you really start looking at your financial life and your individual world, you're going to find ways to reduce your expenses, both fixed expenses and variable expenses as well. So it's something that you need to pay attention to, and you need to do it right away, because you need to be able to do more with less, at least for the time being. Another suggestion that I have for you is that you need to rebalance all your investments and retirement assets into the taxable, tax-deferred, and tax-free bucket. Because if your 401k has become a 201k because you've lost 50% of your money during a 4-week period, then you need to start doing some rebalancing, and this may be the best time to do the type of rebalancing you need to do on your retirement accounts. Now, you all remember the taxable bucket. Everything is taxable. Tax-deferred bucket are your 401ks, your IRAs, your SUPs, your TSPs, your 403bs, and so forth. And then your tax-free bucket would be your Roth IRAs, your Roth 401ks, your municipal bonds, and your 7702 plans, which are your cash value life insurance plans. The challenge with all the audit that I do for new clients when they first join my firm is that the vast majority of Americans have most of their assets in their taxable and tax-deferred bucket. So if all of a sudden now you need to start taking money out of your 401k and your 401k just became a 201k, but you need to maintain your standard of living. So therefore, you need to start taking money out of those accounts. Not only have you lost a tremendous amount of value in those accounts, now you have to pay taxes on those distributions. So in many different ways, those are things that are preventing you from truly maximizing your rate of return and making certain that you can maintain your retirement distribution planning at the level that you intended to. So because of the fact that your account values are now lower, could be 30, 35, 40, 50%, depending on each and every one of you, so will your income. So will your retirement income. And by the way, if you lose 40% on the market, it's going to take a 67% rate of return the first year just to break even. But if you're getting an 8% rate of return on an annual basis after you just lost 40% in the market, guess what? It's going to take you 6.6 years for you to get back to that 40% that you had prior to those market losses. And in the meantime, if you need to dip into those accounts while you're trying to grow that account all over again, you're never going to make it back. You're never going to be able to recover that 40%. And on top of that, inflation never stops. So every year that you're losing money, inflation is going up. So therefore, you're never going to be able to recover from those as well. But this is an opportune time for you to start thinking about Roth conversions. Because, although you have to pay the taxes in the year that you do the conversion, now the growth of that money moving forward will be tax-free for the rest of your life. Now, the other thing is you have to get ready for what's coming. And most of us and most of you are so ingrained right now in looking what you're going through today that you're not seeing the light at the end of the tunnel, and it's not going to be a pretty one. So these are some of the things that you gotta start thinking about. You know, the light at the end of the tunnel at the end of the tunnel is not the other side of the tunnel. It's actually going to be a train that is bearing down on each and every one of us and is fast approaching unless you do something about it. Be prepared to pay twice the amount of taxes that you thought that you were going to pay. And the reason for that is that the government has no choice but to raise taxes in order to offset the potential $6 trillion COVID-19 damages and losses that our U.S. economy has gone through. If you recall this, up until this year, the very early in the year, well, I would say through the end of January, we had the U.S., we had the number one economy in the world. But that's no longer the case. Not only that, we now have an additional potential $6 trillion of debt, which we don't have the money to pay with and to pay for. So the only way that the government is going to do something about this is going to be by raising taxes. And be prepared. You know, if you had $1 million in that 401k, or you have $500,000 in that 401k, and all of a sudden you lost a bunch of money on that, well, now when you start taking distributions out of those accounts, and taxes are going to have to go up in order to offset those damages and those liabilities, now how much money do you think you're going to have left in that 401k that became a 201k? It's not going to be enough to maintain your standard of living for the rest of your life. So unless you do something today, the vast majority of you listening to this podcast are going to run out of money before you run out of life. Now, you never intended for that to happen, but because of the fact that you failed to protect your retirement assets, it has actually put you in the position that you're in today. Now, there was a real estate correction, and that's going to be imminent. Now, I don't know to what extent that's going to be, but that's going to be imminent. There's an increase in unemployment that it's already happening, as all of you are seeing today. I would ask you to keep an eye out for a tremendous increase in corporate, small business, and individual bankruptcies. You're going to see that a lot of homeowners are going to have to let go of their homes. So that means that the real estate market is going to take a dip, similar to what happened in 2008. The economy has actually slowed down and is no longer the best economy in the world. And there are many other issues and concerns that are going to be coming down the pike because of what we're going through today. So the same way that for the past 2 years I've been encouraging each and every one of you to start getting out of your own way and to start thinking outside of the box and to start looking at your finances through a telescope as opposed to a microscope, well, all of those recommendations that I have made to all of you for the past 2 years have now become true. And now the problem is that the vast majority of you listening to this podcast did not do anything about it because you never thought that we were going to have a bear market. You see, you got so used to this bull market that we went through, which, depending on which publication you read, was anywhere between 10 and 12 years. It was, by all calculations, the longest bull market in American history. But that's no longer the case. And for those of you that, in your retirement accounts and your investment accounts, for those of you that have lost all of the gains that you had in 2020, all of the gains that you had in 2019 and 2018, and all of the gains that you have had since 2017, the question is, wait a minute, if 4 weeks of market losses can destroy and deplete 3 years of gains in the stock market, then what kind of retirement plan do you have? Do you have a true retirement plan where you have offense and defense in order to protect yourself, your family, and your retirement income for life? Or do you have a hope plan? And by the way, hope is not a financial strategy. So I am not trying to make your financial world any darker than what already is, but I'm trying to get you to start thinking outside of the box and to get out of your own way and to start making financial decisions for the next 10 to 15 years in which you are going to be able to minimize and or eliminate all of your losses, because there's going to be another market, another bear market. There's going to be another bull market. But usually bear markets are going to happen at a point in time, especially if you're in retirement. How many bear markets do you think you can afford to go through? I would argue, and my answer would be 0. So once again, for those of you that want to start really looking at your finances, where you're invested in, what products do you have, what kind of diversification you have, not only from an asset allocation standpoint, but also from a principal protection leveraging standpoint, and also from a taxable perspective, whether all of your assets are in the taxable and tax-deferred bucket and not enough in the tax-free bucket, and how to prevent and how to create the proper balancing for that. I would encourage all of you to pick up the phone and call me, because I know your financial advisors are not reaching out to you. They're petrified to talk to you. And I am one of the very few, and for those of us that are proactive in reaching out to our clients, I want to thank, if you have any of those advisors, I want to thank them on your behalf, because they are doing the type of job that they should be doing for you. But for those of you that don't, please feel free to call me. You can pick up my brain. You can call me at area code 786-766-1042. I'll be happy to schedule a 30-minute video conference with you at no cost or obligation. You can also send me an email at Bert, B-E-R-T, at GablesTaxGroup.com. And once again, always remember that my goal for each and every one of you is to help you change the way that you see things, because when you change the way that you see things, the things that you see change. So I hope all of you stay healthy. Make sure that you keep yourselves and your family healthy as well. And I'll talk to you again next week. Take care. Bye-bye.